Hello traders and welcome to another video review. Today is Wednesday, the 18th of August 2021. Let's take a look at the Forex calendar because it looks like we are going to be very busy today. Overnight, we got very important data released. Those data were from New Zealand and they were in form of official cash rate. The cash rate has been held on the level of 0.25%, which was against the forecast of increase of the official cash rate to the level of 0.50%. Of course, Reserve Bank of New Zealand statement and monetary policy statement has been published already together with the press conference. During the London session, we had data published from the UK. Consumer Price Index worse than expected, 0% on monthly basis. And the Consumer Price Index score is worse than expected as well, 1.8% versus 2% expected. We had the Retail Price Index, PPI output. Those data had beat the expectations. And we are waiting for another bunch of data from the European Union. Consumer Price Index and Core Consumer Price Index are scheduled for release at 11 a.m. During the New York session, we have data from Canada and from the US. From Canada, we have a Consumer Price Index together with all of the sub-indices. All of them are scheduled for release at 4:30, and the market participants expect this Consumer Price Index to be kept steady on the level of 0.3%. From the US economy, we have a building permits and housing starts scheduled for release at 2:30, and then of course we got the crude oil inventories 4:30 for all of you crude oil traders, and FOMC meeting minutes scheduled for release as always 8 p.m. is the highlight of the day. So plenty of things to check out. I guess we should take a look at the New Zealand dollar, we should take a look at the British pound, and then of course on the Canadian dollar. So let's start with New Zealand dollar. What happened? As you can see, we've made today a new local low. This low was made at the level of 6,865 pips, so this key technical support had been violated, but there is no candle close below this level. So far we are having this kind of a pin bar here, and we might see a bounce towards the technical resistance zone right now located between 6,941 6,972 pips. If we take a look at this price behavior from a wider perspective, we can see that for some time we've been in a kind of a corrective trend here after the 7,462 pips was the established swing high in the middle of the February this year. We got the first wave of the correction, then the bounce, then the third wave of the correction, then the shallow bounce, and then again we are going lower. The next target for bears is seen between the levels of 6,786 and 6,753 pips, and those are the key technical resistances. These levels has not been visited since 5th of the November 2020. So we are correcting all of this up move that started, as you can see, in March 2020. This is 19th of the March at the level of 5,478. So we are still correcting this move on the New Zealand dollar. Of course, in order to resume the uptrend, we need to break above this level here, this technical resistances, 7,097 and 7,113 pips. So please keep an eye on this two levels. As long as we trade below this zone, the correction will continue. So far the momentum is negative. It's the bulls are trying to increase this momentum but they didn't even made it to the key short-term technical resistance zone. So as soon as they get close to this level, the price will smash down again, and the decision to keep the interest rate at the level of 0.25% doesn't help bulls at all. What is going on the British pound? The British pound, as you can see, it has hit the level of 61% of the Fibonacci retracement, just as anticipated. 1.3731 has been hit, so 50% is now gone, and it looks like the flag pattern that I've seen here has been now invalidated, and this might be the low for the wave B. This is the last resort for bulls to bounce and resume the wave C to the upside. There is the level of the technical support 1.3731, which is very close, 61% of the Fibonacci retracement, and if the bulls want to resume the uptrend, they have to bounce from those levels. The lower we go, the chances for this scenario ABC correction to the upside are getting lower and lower. So please keep an eye on this situation here. Another red candle here breaking below 1.3731 and 1.3671 will invalidate this scenario of ABC correction to the upside, and most likely we will see a test of the recent lows, the lows from the July 2021, seen at the level of 1.3568. And the other pair is, of course, US dollar to the Canadian dollar. What is going on here? Canadian dollar is testing the key short-term technical resistance at the level of 1.2647. As you can see, we have a three leg rally towards this level, so this doesn't look like an impulse yet. We bounced almost from the level of 50% of the Fibonacci retracement of the last wave to the upside, 1.2408, but that's the history, and 38 might be removed from the chart. And well, there was almost a hit from the 50%, so it's kind of tricky to say that this 50% had been tested. Nevertheless, we have a free wave down move from the highs of 1.2791. Then so far we have a free wave up move to the level of 1.2647, and right now we want to see whether this level will hold. If it holds and it will stop the rally of the bulls, then of course we should see impulsive decline towards 50%, 1.2408, or 61%, 1.2315. So please keep an eye on the market reaction of this zone here, this supply zone between 1.2647 and 1.2655, because any rejection of this level will likely result in another wave to the downside, and this would be that kind of a corrective scenario. We have the wave A here in a three waves to the upside is wave B, and 5 waves to the downside, irregular flat correction in the Canadian dollar. So this is why this scenario is so important in the short term. Of course, if we break above this key technical resistance zones, it doesn't actually matters that much yet, because we still can go a little bit higher, but we cannot go above the highs of the 19th of the July 2021, which are at 1.2807. So I will just put my technical resistance at this level. There you go. So there is still a room for the wave B to unfold, but this would be a perfect perfect place for all of the bulls to start to pushing this market lower. As you can see, for now we have a red candle, but it's just the beginning of the day. There's plenty of time left for this market to unfold, so please keep an eye on the current situation on the US dollar to the Canadian dollar pair. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.